Let's go.
Yeah, very, very heavy, huh? I've been
Yeah.
excited.
Yeah, I won't lie, even I'm excited actually. Because all the predictions we've been saying is coming true.
Yeah.
It's just people are just realizing it now.
I don't know if they're realizing it or the cracks have just been exposed and it's leaking out.
I guess so. I don't think they're realizing either because the funny thing is yesterday I was at a public event. It was a concert. I was dragged to a concert yesterday. People are getting drunk, enjoying life as if there's nothing happening. I felt like that character from The Big Short. He just walks on the road and he knows the collapse is coming and everyone is just going about the day.
Yeah, no one's it's weird. It's very weird. I felt like I couldn't stop commentating yesterday. Like it just felt like it was like this big, exciting anarchy that was about to unfold. And I just couldn't stop like looking into it. That was the best entertainment this weekend could have brought me.
So
Imagine people lost money and here we are. Just saying how exciting it is.
yeah, everyone's panicking and we're excited. Actually, regarding the fundamentals with USDC, even I need to catch up on that. Can you go over it, like what happened with USDC and everything?
I think Nick's on here as well. I think he's done a lot more diving as well. But like I think from my perspective, it just comes down to USDC's reserves, which it was about, was it 3.3 billion or 40 billion that was locked in Silicon Valley Bank? And then the knock-on effect seems to be more that the other stable coins held USDC as a reserve. Did you see that, Nick?
Yeah, from sort of the forensics that I've seen on the web, it's quite clear that exposure to SVB was 3.3 bill. That's only the reported exposure. Who knows, what they were leveraged on inside that bank as well. So yeah, you're looking at a sort of 8% exposure to one bank, and then also you've got to remember Silvergate had gone into liquidation as well, and USDC had, I think, I'm not sure, but I know they had 8 bills spread across SVB, Silvergate, and BNY Mellon. So you're talking 8 bill, which is, nearly sort of, 16, 17%. And I don't know whether that was purely priced in or was just coincidental that actually the premium and the discount of USDC went down to around sort of 14, 15, 16% on some exchanges. I have friends that, and I was telling you this, Aaron, that sort of got in at 8.6 levels of USDC, which is looking quite nice. And it's kind of more of a priced in premium opposed to sort of getting in at a, I suppose, 4% premium. But yeah, who knows what funds can be recovered. I mean, most of the USDC's and Circle's money is held in treasuries. Their NAV would have decreased massively because obviously bond yields have gone up. Which means prices have gone right down, so the net asset value is down, but then their coupon rate is higher, so they can probably pay off for some of the losses that they had within, I would suppose, I would think a quarter or so.
They did say they would come out though and cover those losses on behalf.
Yes, and that would be from probably their coupons that they're receiving on their bonds. But yeah, I think around from what I've heard, 50-60% could get paid back. So who knows? It might be a 1.5-2 bill chunky loss. I think, but I think it was a lot of fear mongering going on in the markets at the moment. But did you end up purchasing USDC, Aaron?
No, I didn't make it in time, but I was kind of tied between, do I make money out of this situation or do I commentate? And I was too busy. I was excited. I was way too excited. I was just diving into it. But no, I didn't actually put anything. But I saw people like do you know anyone that caught it at 0.87?
Yeah. One of my partners in Thailand. Yeah.
That's the thing. You would have had to have been on like kind of our time zone in Asia to take advantage of it as most.
Yeah, that's the thing. London time wasn't great for getting exposure, the cheapest exposure, because I think it was around sort of 3-4 a.m. it hit those prices. And I told myself that morning, I'm going to have like a relaxed morning where I try not to be on my phone. And yeah, of course, coincidentally, it was Circle bloody crashing, which was a shame. But yeah, I did get in on a few levels. I got in at 9.1, sold back out at 9.5, and I actually had a short last night at 9.8, 9.81. I mean, I pretty much got the top level short, but I wrote it down for 2 pips anyway, because when you look at this, and I've learned this from the UST saga, and I'll always remember this. Whenever we have a stablecoin crisis, let's hope there's not many more of them. Is your risk reward is, I mean, your risk is if you're going short on one of these instruments, USDC, USDT, your risk is practically always fixed, right? Because it's meant to be stable to $1 when it does repeg, but your reward, could be far greater, far greater than your risk. And something I told myself at UST was, I got out of UST, in a loss, but yeah, I really should have covered it off with a subsequent short, and I didn't. But it made perfect sense. But it's again where some emotions can get in the way sometimes of actually the genuine market in front of you.
Down those emotions. But yeah, like I'm looking, I've been talking to a few equity guys as well, like those on like the banking scene. And the funny thing about it is what seems to be the problem was these long-term bonds that Silicon Valley was holding. And essentially it's the centralized financial system leaking into the crypto ecosystem. I saw CZ said, like, speculatively, is this an attack on the crypto space? I don't think so. I think it's, I don't know, if we even look at Silicon Valley Bank as a whole, we've had how many years of very easy playing for venture capitalists, and how many of those startups are banking with Silicon Valley? All of those well, not all of them, look, a vast majority of those startups aren't actually valued at what they were over the last 3 years, kind of taking new valuations on these new raises as well. So Silicon Valley Bank looks a bit like a Ponzi scheme to me that was kind of waiting to happen. They're using these long-term bonds to kind of sort of hedge their losses against some of these startup investments or startups that are providing them liquidity that could die at any time.
Yeah, and it's just so typical, isn't it? When you've had rates that have been so low for such a long period of time, and the way we've looked at borrowing has just been, I mean, like no other time I've ever seen. The mentality on borrowing from institutions and how cheap money was, and it's very simple. It's very traditional economics. As soon as rates go up, can you pay back your coupons? It's as simple as that. And unfortunately, SVB have been caught up in that massively. And yeah, the Treasury and risk departments, have gone haywire.
Yeah, the funny thing is, like, obviously, like I still see this credit bubble still building. It's over $1 billion, well, over $1 trillion now. Buy now, pay later hasn't yet crumbled as I expected, but it's bound to happen. Have you looked at these buy now, pay later programs and like how they're hedging their losses?
What on the back end? You mean like
Yeah.
smaller institutions, a Klarna and these sorts of?
Exactly.
Yeah. I remember speaking to you about this before, but I can't remember the ins and outs of it. Please tell me.
No, I was asking you.
Oh, right.
I don't know. For me, it just was waiting. It's a stack of cards waiting to crumble.
I thought I had this conversation with you before, and now I think these buy now pay later schemes like Klarna, for example, they rely a lot on obviously small ticket items, right? So when you're selling and financing small ticket items, the likelihood of you generating the funds back over a 3-month period, the risk, I suppose, is lowered because it's a small amount, right? And you can spread the risk a lot more. You can diversify that risk a lot more than, let's say, a bank can, and an institutional bank can that's lending out sort of $2 billion at a time, right? Like one of those loans fails, like you could be in the shit if you're not covered off. Whether I would assume it's a completely different approach But yeah, I haven't actually delved into too much detail about the sort of back end risk management systems on a Klarna or a ClearPay.
Yeah, it's worth looking into, because I just see it adding to this kind of credit bubble and more consumers just going more and more towards that.
Yeah. To go on a segue, I was wondering if the group or you did have a look at Pax Gold, because I am smiling this morning.
Oh no, I didn't go in.
Yeah, there's been a big convergence, because I was thinking to myself, this is a clear play here. We're looking at the underlying gold price at 1867, right? Everyone's pumping money into Pax Gold, right? Into inflows, because they're moving it over from USDC into Pax Gold, and whatever other assets. And it was trading at sort of like a 6% premium from Friday's close. PAXG. I think one of the only derivatives markets for Pax Gold is Bybit. And yeah, it's not full of liquidity, but you can get a decent sized position out. I think I had like a 20K notional position. I mean, it wasn't huge, but like it was the right size for the market that was there, because it wasn't massively liquid. But yeah, it converged last night at 1880 and sold at 1880, bought at 1920. It was just bound to converge. I think obviously the USDC increase helped as well. But look, let's say when sort of Sunday opened up, Sunday night sort of futures market opened up again, I would have expected it to converge as well.
Yeah, I can see where you entered here at 1920. Can everyone see my screen?
Yeah, I can see it.
Yeah, so I
think
think
as well to pull up the correlation between spot gold as well, but there's no sort of rolling futures market, weekend markets on TradingView. I don't think
there isn't.
We'll just see Friday cutoff.
But you can see here, yeah, you messaged me when it was. Did you say it was 1925? I think you told me, didn't you?
So I think you are tracking the perp at the moment, but because the market was very illiquid, there were some orders going at 1927, 1928, 1930. I think I got an average price around 1923 with slippage. So I was fortunate to get in at high level, and I thought to myself, I'm willing to take I'm willing to have a larger risk numerically, just to rely on the fact that the convergence will happen, and the actual price of gold is 1867 at the moment, right?
Yeah, and it still looks like we're going in a downward trend by the looks of it.
I mean, it's still, like, if you guys want to, not financial advice or anything, but there's still a 23-point gap there, on Pax Gold, compared to underlying, and you still got some fallout here from USDC. Look at the 11th, look at the pump there, from 1860. That is all speculation. That is not the gold price.
Yeah, I get what you're saying. Yeah, you caught that right there. Perfect.
Yeah, and I wouldn't have cared if I caught it at 1940 or 1920 and it went to 1940, because I knew that I had convergence on my side, right? When the market
10x, was this 10x isolated you put on this one? Or was that
yes. No, that was Doge. I had 10x isolated on Pax G as well. Rode myself 17% profit.
That's actually interesting when you sent it to me, because I've never actually looked at Pax Gold. I actually haven't looked at anything like the Pax USD. I haven't looked at anything to do with Pax Network. So
well, this is the thing. Like, there's so many markets out there, right, that are illiquid, and there are a lot of plays in times when it's very volatile, because those are liquid markets. Then liquidity tends to come in when there's a lot of volatility, right? It's natural due to volume. And there are some plays out there, and this was just, I just thought, not to blow my own trumpet on the group here, but blow it. It was just so clear to me that was going to converge. Like,
well, this is exactly what you're saying. Exactly. Obviously, with GMGN, for people to find out later. With perpetual markets leading spot prices, so the ability to, because there is no rolling gold. I don't even know where you can trade rolling gold, but for this to exist in crypto and be able to trade at 24 and actually take advantage of those sort of differences over the weekend makes it. I like it.
this is what I mean. You know, the the crypto market is very irrational sometimes, and you know, this is almost, to be honest, I wouldn't say this is acting as like a weekend gold market. I mean, it seems like it's purely fallout from USDC, right? But you know, come Sunday night, I'm saying Sunday night UK time, when you know futures markets open up on spot gold, on gold futures, and you know, market makers will come in and arbitragers will come in, and they'll bring that price back down, you know, through the perps. And you know, you got to be aware of funding rates, obviously, because you know, when something's trading above its underlying spot, you know, funding rates tend to be shorts have to pay longs, and it's quite, you know, it's quite a meaty charge. But if you're willing to stick into it, yeah, you can reap the rewards for it.
Yeah, very interesting. And this is a big week, I think.
Mm.
I'm excited.
I wonder if anyone in the group had a look at Pax Gold, or was kind of
MM trades gold a lot. Have you ever looked at Pax or know of it?
Not really. I just trade gold. So that's quite interesting because you mentioned it's open 24/7 and you can take advantage over the weekend. That's pretty interesting to me.
Yeah. I mean, it's a futures market, right? In crypto, so you know, it never stops. It's, you know, I guess some people could maybe look at it as like an added on weekend gold futures market, but yeah, it's just, I don't think it's the case. It's too liquid to act as that. It's just purely speculative. And have a look at that chart today. Who knows where that goes today? If USDC has another sort of sell-off, you might be able to bag yourself some more points on the short side.
Okay, interesting. Yeah, I think we should look at the USD chart. Never did I ever think that I would be shorting. There would be an opportunity to short a stable coin.
Yeah, after UST, I've always been. I think I actually told Aaron. It must have been a good amount of time ago now, that I thought that USDT would crash, but I was wrong. It was USDC that would crash, because once as rates got, you know, increased, and you know, banks had exposure that they're using on the back end, I mean, God knows what could happen. And this is, like Aaron mentioned, there's centralized world leaking over into the decentralized world. It's not the other way around, which, you know, I don't think the media likes as a story.
Well, this is the thing, like if they were holding long-term bonds, it basically states that these banks all think that we're in a recession. You know, despite everything that's being said, it's the only real reason that a bank would start buying those up. And I think what I'm kind of, obviously there's an emergency meeting tomorrow with the Feds, but there's been talk about this insurance package effectively, or this insurance fund to underwrite all of these banks from failing. So like the way I kind of perceive that is, now we're going to take all of the bad debt and just wrap it in an insurance wrap and sell the insurance wrap. So it's the same with those nature swaps that were spoken about. I think I spoke about the 2 calls ago, and like they're taking emerging market bad debt, essentially saying you've got some forest land or some agriculture or some clean energy, or you've got to do something along those ESG lines, and we'll take this bad debt, wrap it up, call it a nature swap, and sell it to the likes of BlackRock, and they'll put it in an ESG fund. So
yeah, no underwrite.
Exactly. So we've just got a junk bond program going on, but I guess we're a lot more aware now. But
it's interesting, because was it you that was telling me that essentially, SVB have obviously requested some form of loan payment delay on payment for the bonds, essentially, and they've asked FDIC to do sort of like a bridging loan, essentially.
Yeah.
For them.
Exactly.
Because I remember, like, that probably would be the better thing to do long term, right? But then it's just like every bank will be putting their hand out, you know, to the FDIC saying, "Can you help us as well?" You know, so it's almost as if like they're kind of stuck between a rock and a hard place, the FDIC, because then they're thinking to themselves, every other bank's gonna want this treatment, you know. Maybe we do just take over and let it fail in some respect. Not let it fail, but you know what I think. Hope you understand what I mean.
Yeah, no, I get you. But you know, one of my there is another train of thought here, and that is, why even bail out the banks? Like, if we're now talking about central bank digital currencies that are issued directly by the central bank, and holding one is essentially like owning a government bond, why would you? Why do we need banks? And this is what I've said before. Like, I think the word bank is just going to change to essentially mean a custodian, and we're going to have custodianship as a service, because now we're moving into this new space where a wallet could be deemed a bank. Binance and all of these exchanges, they're now kind of creating these layer 3 solutions where they're centralizing the DeFi world and offering it as a service. So that's a bank, you know. So if we're walking banks where we've got our own wallets, we've got the centralized exchanges or layer 3 solutions, which are also another form of bank. You're going to have every brand who will essentially enter the Web3 space in the coming 10 years has the ability to be a bank. Look at Starbucks. Starbucks is a bank right now. You can load up a cash wallet and use your cash wallet to, as a consumer, you're receiving, I don't know, some sort of reward, maybe a percentage discount over time, or buy 10, get one free. But all of that capital now sits on Starbucks' balance sheet. So we're now going to enter a space where interest rates are getting high, but they've got an ability to loan themselves money at a very low interest rate. So, and they're not under the same sort of regulation as a bank. So now we need to completely look at the way banking, what banking is and what banking looks like. And maybe the likes of Starbucks doesn't need to have like separate SPVs that have banking licenses.
Yeah, I think it's coming to like the point where it's like, I think community banks have been talked about as well, massively, more so in the traditional space. But yeah, you know, anyone within the decentralized world essentially can pull together funds and become a bank. But you know, a bank is really defined by almost its licenses, right? And regulation. But like the actual purpose of a bank, yeah, I mean, you know, anyone can become one.
Yeah, the processes that a bank actually handles, like even me as an individual does on a daily basis. But I do think it needs to be looked at, and I don't think the regulators even look at it this way. They do seem too many far steps back, and there's this kind of bureaucracy where they're not trying to alarm the consumer, but trying to steady what's being told. And it's all just wordplay.
Yes.
And this week should be I guess the crash of the stock market, according to Dan or Stan, ChatGPT. So that's what I kind of want to do, a live stream as the markets open on, was it the 15th of March when the markets are expected to crash, just to see what happens, because we're going to do this now actually. Do you want to go into open up Forex Factory and we'll assess what time PPI is and all of that, because that's what's probably going to be the outcome, the catalyst of this shake.
One question though. So if SVB, if we had the Federal Reserve actually bail out SVB with their own fund basically, so they need to print money for that, right? Wouldn't that cause even a bigger issue? Because the last time they were bailed out, the banks were bailed out, the economy was in QE, right? So I wonder how that's going to affect, because we're already heavy into QT, and from Federal Reserve Powell last week, he did mention they have to hike rates because the economy still seems very uncertain. So now adding this collapse of SVB Bank, I wonder how the economy is going to react. I think it's going to be very detrimental if they do print money, right?
Yeah, I mean, from my take, I don't think that's happening in direct correlation to SVB. I mean, I'm sure that the funds will probably be taken out of the deposit insurance fund, right, to try and sort of keep SVB going. Yeah, so I don't think it would be, I mean, if a huge amount of banks were to fail, right, and we saw this be sort of like a domino effect, then that's a different story, which who knows, it could be. We're only hearing, one story, right? I mean, I remember, 2000, 2006, 2007, it was, I don't know who was first to come out, it was a countrywide loans in the US, and, everyone thought, oh, it's just a regional player, whatever. And then, yeah, it becomes a domino effect. And, this bear market, it's not like the bull market where it will just pump and then for one of a better phrase, rip your face off. It will be slow and it will be painful, and only when everyone has felt the pain, or almost everyone has felt the pain, will it start to come back. That's always the way it happens, like in bear markets. Just all down to psychology markets, right? People are far quicker to sell their profits than they are to sell their losses. Let's put it that way.
Do you know what's amusing is that whenever we start to talk about this, we all put this really sadistic tone to our voice. Like we're all secretly happy, like there's blood in the streets.
I've always tried to adapt to what the markets are doing, but like I've always had this kind of bear feeling in my mind for the last 2 years that I just haven't been able to shift too much.
I think we're just all deep down inside just macro short sellers.
Yeah. But then I say that I went long Doge yesterday. What's happened to me?
But there's a few things like I'm interested here because obviously we've seen what's happened in 2007. Lessons have been learned that if we do this, effectively what Michael Burry said a few weeks ago, that we get this sort of double dip inflation. And I think he said that when we reduced to 25 basis points. So from that, that would essentially make what he said come true. But by doing this insurance wrapper, this fund and the insurance wrap and selling the bond off, it's kind of buying more time before they enter that kind of stage of QE. But if you do let the other side, you let the banks die. You don't bail them out. You don't bail them out at all. They're reliant purely on bail-ins. So effectively $250,000 US that will be insured. What I think it is it £85,000 in the UK?
Yes.
Yeah. So either diversify your bank accounts to protect those assets, or start to put it into more tangible assets, I would say. But that's all they're reliant on. So that kind of, I would say, just would buy the banks time, but inevitably they would just die. And then you've got, what was it, Finland, I believe, or Greenland, who instead of bailing their banks out, they issued directly to the consumer. Now, that's exactly what a CBDC is, and that's the model that's kind of been implemented for all of these pilot programs now. So this is where I'm getting quite concerned, is that it's like you're walking into a trap.
Yes, CBDC is certainly opposing some challenges, I think, around control and government power, and how beneficial it'll actually be for the end user.
Yeah, it's not. It's just about velocity of capital for the government. And I said this on, was it the last call we did? I don't think he made it. I think it was after the course. And the way I look at it is that the economy is goods and services, and the flow of those goods and services. The government is effectively just this centralized taxation authority who's meant to allocate capital, and how effective they are in allocating that capital into the right areas is the strength of your economy. But over the last few years, the government isn't allocating that capital into stimulating areas of the economy, hence why nothing's moving. Yet they're so far behind. You've got places like here in Dubai and China and a lot of this region, which is very technology forward. Africa's even technology forward. They're so tech savvy. Eastern Europe, so tech savvy. Whereas these more mature markets have just sort of been opposed to any form of accelerated innovation like this, where we're sort of skipping steps. And that might be due to like just the size of their governance. Now, so the government looks at us as the consumer as the problem when it comes to the velocity of capital and the problem in the economy. They see us as the bottleneck. But us as the consumer see the government as the bottleneck. And well, they don't. This is the problem. They don't see the government. They don't see what they do and what is meant to happen because they don't understand the economy. But the government is the bottleneck here because they're not allocating in a true free market. We would have that ability to stimulate the economy. We don't need to have a country where infrastructure only gets built because the government's put a bill and a budget there. You know, you could have a very free capitalistic market structure where you build a bridge and you put a toll road on it, which is essentially what Dubai is. It's a very purely free market capitalistic structure with state capitalism as well. Whereas these other countries like the UK is not state capitalistic by any means. They're very privatized after Thatcher. The US is state capitalized. Like we looked into this last call as well, where like the likes of BlackRock and Vanguard, they manage how much US government capital own how many consumer goods. That is a state capital entity. China's a state capitalist. They're not communist. Communist is just a buzzword the US uses to sort of rise up the anger in Americans, which they did all through the Vietnam War, again in the Cold War. Like, damn those commies. Like, it's all fucking bullshit.
I think this probably, like, to do a little bit of a segue again, probably shows as to how important this group is, like, in the future. I think with what's going on in the world, especially with CBDCs and taking control of even more control and power from the little man, you or me, right? And, you know, I think providing sort of almost like a group where everyone can share their ideas, good or bad initially, we can both have viewpoints, but also, you know, people that, you know, I've obviously, you know, fortunate enough to have had exposure to sort of different markets and different people and traders and all the rest of it, you know, and maybe sharing things that you'd never have access to. You know I didn't have access to this, you know, a few years ago, or direct access to it. And I think that's where the clear sort of value is within Mesh. And that's why I think, you know, there's a clear growth strategy that Aaron's put forward to make it grow and to bring in more users. And, you know, I know he's got the ideas for the wealth fund, which I love, and, you know, I'm on board with. Yeah, I think it, to say it in typical DJing way, it's a platform to, you know, help yourself not get fucked.
But I actually, this is something to talk about here. But I'm looking, we're having a debate, Nick and I, about building on Bitcoin. He doesn't see Bitcoin as a good network to build on. It's not got the infrastructure. I see it as something that's underdeveloped and holding true sovereignty. In the last few weeks, I've just become a very true Bitcoin maxi by all sorts of the meaning of the word. But now, based on everything we've actually just discussed and how these privatized, centralized entities, even going into like what we did on last course, where we looked at the social networks like Facebook, Twitter, Google, and who those majority shareholders is, it's very easy for a government to lean on these entities through this state capital structure that people just haven't got their eyes open to. So that's where I see the strength of Bitcoin, but Nick's got like a whole nother thought pattern behind this. So we need to clear this up.
Yeah, look, look, Bitcoin was my first baby. I loved Bitcoin, you know, a long time ago now, in a galaxy far, far away. You know, I just, look, I would change my mind on it if you could build on it properly, right? And, you know, devs moved over to it and protocols moved over to it, and there's more projects like there are on the Ethereum or Polygon or Arbitrum network, right? I would. It's just that it doesn't exist at the moment, and it's quite an outdated technology, you know. You know, I compare it like essentially like it's a Nokia flip phone compared to an iPhone. When I compare, let's say, I don't know, Arbitrum to Bitcoin, right? However, in saying that, it is really almost truly decentralized. It's only one of the only coins that's still truly decentralized, right? You know, with the proof of work system and all the rest of it, right? You know, essentially what I'm trying to say is Aaron's desperate for us to build on Taproot. That's what I'm saying, and I'm not too certain of it yet.
I think it just takes someone to make that first step. Like Aave is the biggest lending protocol in Ethereum. If no one had taken that step, Aave wouldn't exist. So
Why would
I
you
wouldn't-
look at something a bit faster than Bitcoin though? Wouldn't you be more interested in the fidelity and transactions and stuff?
see, I look at Bitcoin because it's so decentralized. It's kind of how Ethereum is now as well, because they've dissolved the foundation. But it's still, when it fully transitions to proof of stake, it becomes a whales game when it comes to changing or manipulating the network. Whereas through the proof of work system, that's not the case. So because of that, I would say it's a little bit more of a bureaucratic system. So developments are slower. Like, look how long it's taken it took for Taproot to come out, to give the ability to build on it. And the Lightning Network is reasonably fast. What's the layer 2 solution? Stacks or Slacks?
Yes,
that Ordinals was built on. Like, I don't know if you've used it yet, but it seems very workable.
Has anyone in the group purchased any ordinals, or?
I don't think so. I think everyone got scared of NFTs.
I think ordinals are going to grow even more in the short term. And yeah, watch this space actually, because we may have an announcement soon about that.
So he hates on Bitcoin and then builds on Bitcoin.
Look, I like ordinals.
Do you think it'll bring a lot more liquidity to Bitcoin, and it could see some, like, Bitcoin could see some short-term strength because of it?
I don't know if it would bring more liquidity to Bitcoin. I think it's kind of harnessing the existing liquidity that's already there on the network. It's definitely going to incentivize miners more because transactions are going to increase, certainly. And I don't actually think, apart from the apes on ordinals, there's actually not really been, from what I see, one kind of standout project with a genuine artist or a big collab, right? And I think that will come because people need to park their Bitcoin somewhere instead of just in their ledger or their a hot wallet on an exchange, right? They want access to that, the diehard Bitcoiners.
That's me now. Should we look at some fundamentals for what's coming this week?
Yeah,
Sure.
let's begin.
15th is what I care about right now.
I wonder if, because usually, don't quote me on this, but I think on 15th, a lot of earnings reports comes, usually on a Wednesday every week. So perhaps that has something to do with it. So let's see what happens this week. But from taking on from the last week's fiasco, the federal funds rate, we had over a 70% probability that the Fed will be hiking rates by 50%. But after the events that took place last week, it has dropped to 68.3%, and people are now pricing in even a possibility of a 25 basis point rate hike. Another one is this year, before this week, they mentioned there will be no rate cuts this week, this year, I mean. But now they're pricing in a 25 basis point rate cut by the end of the year. But these sentiments can change depending on this week because we have heavy fundamentals. So before we look into this week, let's look at the few of the important events that took last week. So on Tuesday, we all saw what happened with Powell's speech, right? And he just reiterated what we've been saying. The economy is still, the inflation is still extremely persisting. A lot of people are gonna feel pain with a lot of job losses, right? So nothing surprising there, but the market sentiment did take a hit, and we saw a lot of US dollar bullish pressure, right, during this time of the week. Then we have the precursor to NFP data that came out on Friday. The precursor was ADP, non-farm employment change, and this came in higher. showing inflation is persisting, these numbers should be dropping actually, right? If the economy is hurting and the rate hikes are working, these numbers are supposed to be dropping, but these are the precursor. That's also, we see the same thing, the same trend with Joel's job openings. It came in higher than forecast, but a little bit lower than the previous reading, right? Again, Powell said the same stuff here and here, nothing different. Sentiment was US dollar bullish. We did see unemployment claims increase a bit, right? So a little bit of contradiction there. But the main event was on Friday. So we had Bank of Japan policy rates and everything. Nothing changed. They still kept it at negative 0.1%, remaining in QE, even though their inflation has come up to 4%. So there's nothing has changed with the JPY. The yen still stays weak, right? Then we had GDP in UK, which went up by 0.3%. Nothing surprising there. Inflation is in double digits, so I would expect this to increase. This needs to start dropping if we do see rate hikes work, right? But in my opinion, I think the especially the economy in UK is in an absolute shambles at the moment. So we're going to see how that unfolds. But the main part of the event was NFP data that came out last week. And what do we see? Another green number, right? Higher than the forecast, but lower than the previous one. The previous one, we had a massive number which came out, which was at 517K. And the main thing that we wanted to look at this week was this an outlier data? Or did the trend, is this kind of trend going to persist? But from the number that we saw, this might have been an outlier data, and the number still came in green, right? The number still came in green. Regardless, inflation is still persisting. Job market still is persisting. But if you look at the trend, right, from all the way from the May of last year, we've been seeing green numbers, right? So these numbers need to start coming in red if the rate hikes are working. This is why earlier this week, Powell did mention a lot of people are going to lose jobs because they still need to hike rates further because they haven't been as effective, right? Unemployment did increase a bit, but I don't think that's going to be as significant. So one thing, if you're trading this week and you trade the New York session, make sure that you change your timings because we do have a daylight saving time shift. So the clocks are going to get rolled back an hour, right? So the grand event is this coming week. Nothing much on Monday. On Tuesday is when we have the heavy fundamentals. And if you notice the CPI data that's coming out this week, we see a drop of 6% from the previous data, which was 6.4%, right? And if you do look at the previous data as well, it went a bit up, right, from the forecasted. So I wonder how this is gonna, what kind of results we're gonna see, because the market at the moment is on edge completely from the fiasco of last week. So depending on what happens here, we might see a lot of sentiments change. Even depending on even the Fed's sentiments might change, right? So this is going to be a very important fundamental to look at this week. So let's see what happens. Does it really drop or not? But if you look at the, let's look at the core CPI. Core CPI is expected to stay stagnant, right? At 0.4%. Core CPI, it excludes food and energy, right? Because especially energy is heavily manipulated. So this is why when we did see a massive drop, I think it was on, where was it? I think it was on Jan of this year when we had a big drop. We had when we did look at the results in the measure group itself, there was a massive manipulation with the energy sector. So it would be, I would like to see what happens with core CPI because this excludes food and energy, right? And this is estimated to come in stagnant, right? So let's see what happens this week. So after CPI, the next day on Wednesday, we have PPI, which is the producer price index. So this is the consumer price index. Now we have the producer price index. And again, what do we see? Let's see the trend with producer price index. We have a core PPI, which is coming in a bit lower, right? Again, this excludes food and energy sector. So this is estimated to drop. And if you look at the PPF month over month, this is estimated to drop quite a lot, right? By 0.4%. So this is going to be interesting to see what actually happens here. Even core retail sales, if you see the number, that's a massive drop, which is forecasted, right? A negative 0.1% from 2.3% from the previous result. So this drop here, if it does come in the negative, I think this will show you the consumer sentiment at the moment. People are probably trying to save money and etc., right? Because of the state of the economy. So if this number still comes in green, that means the Fed are still going to be looking at making a 50 basis point hike, right? So let's see what happens on Tuesday and Wednesday. And on Wednesday, we've been mentioning possibly if ChatGPT is right, we might see a market crash. But I would that would really surprise me. But let's see what happens.
I want it to be right. Like I just to prove the technology, I want it to be right. Does it say what time the emergency meeting is on Monday?
Not really. Nothing obviously is mentioned here, but they said that it won't be disclosed. They want to do it behind closed doors, so no information gets out. That's what I saw from the articles, the newspaper articles. So let's see what happens.
Democracy.
Yeah. And on Thursday we have the Philadelphia Manufacturing Index, right? Number is still in negative, but coming in a bit higher from the previous result. So that's going to be interesting, right? That this shouldn't be recovering as much, but let's see what happens here. Unemployment claims is forecasted to drop, which is not a good thing. Then we have the University of Michigan consumer sentiment, which is also dropping a bit, but I don't think this is gonna, if it does come as forecasted, I don't think it's gonna shake up the market. But the main event of this week is CPI and then the PPI data, right? What do you guys think? In CPI, do you think we're gonna drop? Do we stay stagnant, or are we gonna come above forecast?
Oh, I actually think we'll it's either stagnant or it's higher.
Yeah, even I do think so. I think possibly stagflation is possible, right? And from my experience, when stagflation comes about, we see massive gold moves. Gold does really, really well during times of stagflation. So let's see what happens there. Yeah. So the Dixie, let's look at the Dixie first. And this week has been quite interesting because if you look at the candles that have developed, the weekly candles in most of these pairs, they do look a bit unnatural to me because you see heavy rejections and the trends started to break out of nowhere, right? Even if you do look at the weekly candle closure on the Dixie, the dollar index, what do we see? A massive rejection, right? We see price did slow down, we see a massive rejection. And now the question is, does price retrace, maybe fill up some of these gaps, right? Or even possibly, I mean, this might be far-fetched, but do we see inverse head and shoulder? Possibly, right? We see price come back to that area of support, possibly build a head and shoulders and then take off. Or if price does actually reverse, can it break through this massive support that we've been calling out for the past few months? So if it does break here, then we see dollar bearish sentiment. But from all the fundamentals that I see, personally, I think that shouldn't happen. But again, we only adapt and react as traders. We can't predict. So let's see what happens with the dollar index, right? So Aaron, do you want to share your crypto pairs?
Yeah. All right. Sorry, just missed my screen. Can you hear me?
Yep.
I lost the Zoom thing, so I don't know if I was on mute. All right, BTC. So that short played out very nicely. I think I took profit way too early. So it hit my TP at 21.6K before we saw that sort of giant red fingering to the market the other day. So based on what I'm seeing, I'm looking really only on the 4-hour now, seeing this rising wedge with major resistance at about 20.8K. So based on this weekly closure, we'll go up to a weekly higher level. We've kind of been following in this range now on a much higher time frame between 15K and the sort of the higher range. So it is a large range that we can play out. If we close below 20.8 on the weekly, we should see more downside. And that's what my sentiment is right now. I did expect that possibly there would be some movement into BTC yesterday and the day before, which there was, with kind of everyone kind of closing out stable coins and looking for something that was more stable than a stable coin, which was Bitcoin. So that's risen up. I think what we'll see now is all of those people that have taken advantage of that premium, they'll now sort of take profits, and we should see that decline in price. Likewise, Ethereum, I'm not really going to go into that in too much detail, but I'm expecting that to fall as well. Based on the fundamentals, everything you just said as well, it kind of falls in favor of what I see happening next. On the monthly, still very bearish. Until we break this neckline at 25K, 25.2, we're in a bearish descent. So everything's still there. I'm not looking for positions at the moment. I kind of see this area as a bit of a no trade zone. I might put a little bit of a degen short in if I'm awake for weekly closures. So that's how I'm looking at BTC.
That's a beautiful shot that you took.
It is.
Oh,
the one I took?
Yeah, the one you took. Yeah,
that's quite beautiful. 4-hour. Yeah, it was nice. And there, I just moved it. Yeah, from 25K to 21.6. It was nice. I did think that level would hold. I did think 21.6 would hold and we would move sideways for a bit. But look, that was a massive fundamental play that came out. But back into FX.
All right, let's look at indices. I think this is going to be the focal point of this week. S&P 500 first. And yep, all the trades on S&P 500 have played out perfectly from last week. Let me delete this. All right, so let's look at the weekly chart first, right? What do we see with weekly? Weekly chart closed bearish with the bearish engulfing obviously from all the comments and the uncertainty in last week. So the consumer sentiment is the risk off, right? So we see a lot of crypto bearish moves and indices, right? Like S&P 500. So on SPX, we have a bearish sentiment. So we are bearish structure wise. And we did break the last structure point on which I have mentioned out right there. So now the question is, let's look at the daily time frame. The daily time frame, what do we see? Price did break through that structure point and it started making new lows, right? Now the question is, I probably would wait to see if price can come back to retest that area and hold this area as a resistance and then take another leg down. So I would say this area would be at, let's call it 3970. Right. And let's look at the lower time frames. I think we are seeing, yes. So what do we see? Price is starting to reject and is about to find maybe retrace, right? So also we have another confluence here. What do we see? We see area of supply demand, which was broken obviously, and then what do we see? A gap in the market that needs to be filled. So price does need to retrace around this area, and possibly we see another leg downwards. but you have to trade with extreme caution this week because we do have CPI and PPI. So if you do take trades, maybe using lower risk would be would make more sense. Honestly, I think this would be the best course of action with S&P 500. I don't see anything else that makes a lot of sense to me. Only the point that I've mentioned here, the 38550. The reason why I have mentioned this is if you look at the monthly chart, we are stuck in a massive consolidation, right? Consolidation area there. So that's why I have pointed that area out. If that area does break and we do not see the retest at 3970, if we do see price breakthrough around this area, there's a possible short position that you can take because that breaks the monthly consolidation. So these are the only 2 points I'll be looking at with S&P 500 SPX. Let's look at Dow Jones, US 30. US 30 as well from last week, all the points have been played out. The only point we mentioned, 32750. Let me delete that. So on the weekly chart, just like the S&P 500, we see a bearish engulfing, right? And actually on the monthly chart, if you do see price has started the formation of the candle, we see rejections towards the top, a bearish structure, weekly bearish structure, daily. In fact, on the daily as well, we see a lot of bearish structure. And if you look towards the left, what do we see? There's a possibly follow through of this kind of movement on US 30, possibly, right? Or possibly price can retrace again towards that weekly structure point, find resistance, and then drop. So it's a little bit similar towards the S&P 500 because that's those kind of moves that we've been seeing from last week. Let me actually mark this off as well. So possible retracement there, and then another leg downwards, right? And let me mark off this area. This area has been a very confluent area, if even that's a word, but this area we've been taking off trades off this area for the last few weeks, in fact, right? So this area here, and let's call this, can we put 32,700? Yep, 32,700. So I would look at taking maybe shorts over here. If you look at the lower time frames as well, just like the S&P 500, what do we see? Massive gap there, right? So price needs to retrace around this area there, or the supply demand area, and then maybe taking a short position around this area would make a lot of sense. So that's the only position I'll be looking at with Dow Jones. And if price does follow through and breaks through to the downside, I don't think I'll take any positions because the train has left the station there, and that's where you had to enter. So if you had entered the short position last week, you could have held the trade. Exactly. So if you had entered this position last week and are still holding the position, then I think just holding the position and seeing if price can follow through to the downside, that would make sense. But if price starts breaking structure, even this structure here on the 4 hour around here, maybe taking partial profits or even closing off your position would make sense. All right, so let's look at the Forex pairs. Let's look at GU. GU also played out from last week. We got that massive wick to the downside. But GU has been extremely dirty this week, right? Like, do you see the massive wicking on both sides? That's a very dirty, right? So me personally, if I just looking at the current candle closure, that's not telling me much. We see a lot of rejection towards the downside, but we do see a rejection towards the top side as well. And the body of the candle is a doji candle, not showing much of seller's volume either. So me personally, I don't like the sentiment here on the weekly, but technically, if you do see the chart, we do remain bearish. Why? The structure broke. We see price holding that area as resistance. So the sentiment is bearish, but at the moment, what do we see? We see price did break through this consolidation area there, right? broke through and then broke through the structure points there. Then price retraced. Price should have found some resistance here, which I would have liked, but price did retrace all the way towards the top again. And okay, so price retraced, and at the moment, possibly this you could consider this as a area of double tops, right? A heavy resistance area, even triple tops. Possibly price can make a leg downwards. But me personally, I wouldn't take the trade around this range because it has been extremely choppy. So if you want to take it, you can, but I think the best course of action is to wait for this structure point here to break, and then see if price can hold that area as a resistance, and then maybe take a position. So this area I would say is at 1.8270.
Does look like a nice channel there, like a downwards channel.
Yeah, actually, that's a nice channel as well. I can draw out the channel. Let me see if I.
It's respecting it very well, both on the upside and downside.
So something like that, I would
Yeah.
say, right?
Up a bit more. Oh, I like to include my wicks.
Something like that, right?
Yeah. Oh, I didn't know you could do that.
Yeah.
What tool is that?
So, it's the parallel channel tool. So you can use that, draw out your channels. But yes, possibly, yeah. Possibly price can bounce off this channel, right? We're gonna wait and see what happens. I think if price does break here, if it looks towards the left side, you can maybe take a position there. I don't like projecting the TPs, but if I did, I think taking a TP area around area of TP1 would be here. And then TP area would be, second TP area would be all the way. If you look at the candle here, we see a massive gap towards that area of 1.5680, right? So let's see what happens this week. So, let's look at British pound, Japanese yen. Also choppy. Very, if you look at the daily chart, which I'll show you in a minute, quite choppy. We see the rejection of the previous week, and then we see a follow through of price on a bearish move this week. But this candle isn't telling me much, because structure wise we do remain bullish. Look at the daily time frame. The daily time frame has been choppy. We did see a move on Tuesday. We see price break through that structure and then fall through, but it's just been too choppy for me. I don't like trading in this kind of conditions. So the main part I would be looking at this week is the same point that I mentioned last week, is to see if this area can hold as support. If this area can hold as support, then maybe taking a long position there would make sense. Because even fundamentally wise, the yen is weak. And on the daily chart as well, I think both ways, right? This can maybe these highs breaking here, or this area finding support. If this area can find support, then you have a nice range of a massive range. That's a massive range of 344 pips, right? Let's call it 340 pips. So if price can mimic this kind of movement after finding support, then possibly you can have a massive trade here. But let's see what happens this week. And now let's look at gold. Gold has been, I think it's been confusing me as well. I've been taking longs, but this weekly candle is quite interesting. We saw a lot of bearish moves here, right? But one thing we kept mentioning from the last 2 weekly calls is price, first of all, couldn't break through this structure point. But then last week, we see price created a new structure point, right? So we started paying a lot of attention to this structure point, but this structure point did not break this week. What did we see happen? It came back to there, found support and took off. We wanted to take a short position if it found resistance. So that did not happen last week. And now the weekly candle also closed with this massive rejection candle. And I wonder if this is the pricing in of the CPI data, possibly coming at stagflation, because gold does really well at stagflation times, right? So if CPI does come below expectations and it is stagnant, possibly gold can make a move up, breaking these highs, right? If these highs break, which is a very important area, because if you look towards the left on the monthly chart, this area is been holding as resistance, right? So this area breaking through possibly can have a lot of bullish movements with gold. So I'm interested to see if price can actually do that, or maybe if price actually finds a new lower high and then drop. So at the moment, it's a very uncertain with gold because the monthly chart is clearly telling me it's bearish because of the triple tops, right? And structure-wise, this area did not break, so therefore we remain bearish, right? So monthly is bearish, the weekly chart is bullish. So it's contradicting. On the daily chart is bullish as well. So depending on as a trader you are, me personally, I like to look at the weekly and the daily to take my trades off from. So the sentiment of the weekly and the daily is bullish. Therefore, I might be looking at taking long positions, possibly, right? That's what I did last week when price did find support somewhere here. I took positions. Unfortunately, I did not hold, which I should have held. But for this week, I'll be looking at this point that I mentioned from the last week has been very interesting to me because it's a massive price gap, right? On the daily chart as well. It's not the 4-hour chart. So possibly price can come up here. And if this does reject and find resistance and makes a new lower high, possibly you can take short positions, but I would be very careful. I would wait for confirmations if it want to take this position. Second would be this area. If this area breaks on the weekly, this switches the time frame to bearish on the weekly. So 1810 would be an area to be, I would be interested in seeing short positions. But if you're going to take long positions also, let's see if there is any areas that make sense. So in the daily, what do we see? We see a lot of bullish pressure, and I think there'll be a follow through towards the bullish side. And if I was going to take long positions, I would be targeting around this area there. So let's see, on the 4-hour, on the 12-hour. So possibly on the daily chart, if you do see price did break through the structure point there, right? Possibly price can come down there to find support. But the thing that I don't like is these gaps in the market, right? So I would say this is a little bit complicated. I wouldn't suggest to take long positions just because of these gaps. But if price does retrace around this area down here at 1835, possible short positions, long positions, not short positions. Long positions which target this this area there, which is, let's call it 1915, which is a massive move of 790 pips. So that's a big move, but I would be very, very cautious trading gold, especially this week with CPI. Only low risk would be make a lot of sense this week. Yeah. So yeah, that's it for this week, I guess.
Oh, that was a good call.
Yeah, that was a really good call.
Yeah, I think I like that bit at the beginning. It was good to get into it, I think. Man, I kind of regret getting a standing desk. My feet are killing me.
You can't change the height?
Yeah, I can change the height, but like I moved the seat away. I've started to use it as I was like, I've got a standing desk now. I don't need a chair. So I was like, it's repurposed to hold my my bed sheets as they dry out of the washing machine. Oh man, but I'm excited for this week.
Yeah, I'm quite excited.
Good to see you.
Should we live stream Wednesday?
Do you want to do like do it?
Yeah, why not? Let's keep a call on Wednesday and maybe during New York Stock Exchange time when it opens up. That's at 5:30 p.m.
UAE.
Yeah.
5:30 p.m. UAE, 1:30 p.m. UK. And that's PPI. What time is PPI and everything coming?
PPI is coming at where is it? It's coming at 4:30, 1 hour before the New York Stock Exchange open.
Oh, so maybe we need to go a bit earlier, and what we'll do is we'll get the chart up and we'll just we'll just live comment, and it's just probably going to be a lot of us going, "Ooh." I was watching one the other day. I think I posted when Powell was talking his testimony, and they live streamed it, and they had like Dixie next to it, and the chart was just moving. I was watching it for a little. I was like, "Oh." There's something oddly satisfying about watching a 1 minute candle, even a second candle. That's
Oh, the
so
second
stimulating.
candle.
A second candle just does so much for my ADHD. I'm like, all right, cool.
All right, then, cool.
I hope that
Let's
was
see.
good for everyone.